Hello, welcome to a dive into the market with Legacy Capital, where we look into the market and we do our weekly projections starting from Monday all through Friday. Our key zones of interest, what we should be expecting as far as markets movements are concerned with regards to pure price action. Today we are looking at the market from Monday, the 21st of October, right through Friday, the 25th. Our expectations and how we should deal with the market. We'll be looking at the DXY, we'll be looking at the Great Britain pound, United States dollar, we'll also be looking at the Euro, United States dollar, and also United States dollar and the Canadian dollar. But before we go into that, let's look first at fundamental analysis. What are the key activities? So the high impact fundamentals we should be expecting today, starting from Monday the 21st. We see that we don't have any major high impact news right through on Tuesday the 22nd. We'll be having the governor of BOE governor Billy will be speaking, and it will be affecting the Great Britain pound. That will be at 2:25 p.m. And on Wednesday, we'll have the Canadian dollar monetary policy report, 2:45, and then at 3:30 we'll be having the Bank of Canada press conference, and at 9:30 p.m. we'll also be having the Bank of England governor speaking. And on Thursday in the morning at 8:50 a.m. we'll have a French flash manufacturing PMI for the euro, and at 8:30 we'll still have the German flash manufacturing PMI, which of course will be affecting the euro. At 9:30 we'll have the flash manufacturing PMI for the Great Britain pound. And at 1:30 on Thursday, we'll be having unemployment claims that will be affecting the United States dollar. And at 2:45, we'll be having the flash manufacturing PMI for the United States dollar. And rounding up the week on Friday, we'll be having core retail sales for the Canadian dollar. Those are the key fundamentals we should be looking at, or we will be looking at all through next week. And you should always look at your fundamentals as far as your analysis are concerned. From there, I would like us to move straight to the DXY. That's the American Dollar Index. With the DXY, you see, okay, so this on the 1 hour time frame, this is what we were expecting. We get two options: either it pulls up to this zone, it retraces back, and then it pushes up, which is the exact scenario we had last week. So this week we'll be looking at our key zones with respect to last week movements and what we should be expecting in this week. So for us to go straight into the XY, what we should first of all be looking at, let's just take a vivid look at the 1 hour candle. So 1 week candle, okay. For the 1 week candle, we'll see that last week was strong, was strictly bullish, and from the 1 week we can actually confirm that the market will still be bullish this week as far as the XY is concerned, because we have a base here. The market will definitely have to push up against this base before falling down, or maybe even breaking the base and get into our key zone of 105.728. So from the weekly zone, we have a high tendency that the market might be bullish. So now we should be also be expecting the market to form a base, because as the market left this zone with momentum, the market has been resting, so it can form a base to push over to get to our key level of 1.05.79 or so. So from the weekly time frame, let's check what the daily time frame is saying as far as the XY is concerned. So on the daily time frame, as far as the XY is concerned, we'll see that on the Friday, the XY was a weekly, the XY was bearish, but this could obviously be the base we are expecting. So now, what are our expectations? We can't base our conclusion on it, given the fact that it is just after filling a fair value gap, as ICT traders say. At this point, it has not even completely filled the fair value gap, so there is a possibility see that it can push up a bit, or this could just be a base and we'll see more momentum push up into our supply zone. So we can be expecting the market to fall down as we saw on the weekly time frame. But if in case momentum if we trace it back maybe to this level, push it off, possibly trace back a bit, let's say maybe from this level we can push it down again to this place here, then gather momentum to come and break this. Will still be expecting the market to go to our level of 1.05 point something as we saw on the daily time frame. So we could possibly see a slight retracement with GXY, but it doesn't mean that the direction or the bullish momentum of DXY is over. So we should join the market this week with open minds, and we should actually pay keen attention when the market gets to this zone, because this zone has been the supply zone. So the market could possibly retrace a bit from there before going back. And if you want to maybe have further confirmation, let's not hesitate to check our Fibonacci retracement to movement based on this previous level. Okay, so you see that with the Fibonacci retracement, this retracement is coming from the 61.8% level, which of course is a good level for a retracement to occur in because it's above the equilibrium level. And now we could possibly see that it pushes up to enter the supply zone that is above the equilibrium level before moving down. So we should pay special attention to the XY as it may possibly retrace back before pushing up this week. So we should be keen at every movement, and we should take any information that each candlestick presents to us wholeheartedly. From the daily time frame, let's look at the 4 hours time frame. On the 4 hours time frame with the XY, we will notice that okay, the XY is actually building momentum, is trying to retrace, but before we confirm on the 4 hours that the XY is retracing, the XY must completely take out this zone. It must completely take out this zone. So it must completely take out the previous higher low or lower high that we have at this the previous higher low that we have at this level. We must completely take it out so that we should know that okay, we have a change of structure at this level. If we don't have if we can't see a change of character at this level, we can't say that the market is selling, because there is a high tendency on the 4 hours that it can retrace back from this level and push into our key zone. So we should pay special attention. The 4 hours is presenting us with a scenario whereby upon market opening tomorrow, we can see that the XY from this level pushes up back, clears up liquidity into this zone, and it pushes up back to this area or to our supply zone on the daily time frame, which is also a supply zone on the 4 hours time frame. So this like pushes into the zone without retracing. So for now, we have to pay special attention to what happens with the XY upon market opening tomorrow. But for now, our overall bias is still buying both on the daily time frame, on the weekly, on the daily time frame, and on the 4 hours time frame. We see that it's still creating a series of higher highs and lower highs. So we should pay special attention to it as the market opens this week. From there, from the 4 hours time frame, we can move to the 1 hour time frame to confirm to see if we are also on the 1 hour time frame. Notice that we are still in an explicitly higher time frame. The market is still pushing up. The market is still pushing up. The market is still pushing up. And the last structural high, the last structural higher low that the market created, which is this, the market has not taken it out on the 1 hour time frame. So we must be keen. If the market takes it out on the 4 hours time frame, obviously the market will take it out on the 1 hour time frame, and that is when we actually confirm that there is a change of structure, it's a change of character, and the market is now moving downward. But if the market fails to move easily, notice by the time the market, first of all, goes to that level, by the time the market goes to this level, what happens? The market gathers momentum and pull right up. So right now, by the time that the market gets here, we should be expecting to see the same thing. The market should also gather momentum and pull up and definitely get to our demand zone. So that should be our expectation. There are buyers present at this level. So we must actually see that the market rejects this or breaks or overtake the sellers, overtake the buyers that are present in this zone before we can conclude that the market is selling. If it fails to break this zone, then we should definitely know that we are still in an uptrend and we should be expecting the market from that level to pull right on to supply zone. Then we expect it to retrace back and then we push on further as far as it goes to our supply. So on our supply zone, obviously we will see a change of character before we can be able to sell or we can be able to buy. So that is what we have seen with the XY. We are expecting to see that the XY moves further up this from the XY. We should look at GBPUSD, that's Great Britain Pound, Euro, United States dollar. Onto Great Britain Pound, United States dollar. We anticipated last week that the market was going to be bearish, and if you look at the last week candle, you will notice that the market moved close to about 139 pips. The lowest point was at 1.2977 and the highest point was at 1.3129, which shows that the market was bearish but without so much momentum. So at the weekly time frame now, what are we seeing? What can we make out from it? We will notice that the market has actually broken this level. The market has broken this level. The market is no longer hanging at this level. And currently the market is trying to build this momentum down towards the downside. So the market is actually building momentum towards the sell side. So what should be our key interest on the weekly time frame? We want to see that the weekly candle continue down, maybe possibly to this demand zone before retracing. So we are expecting to see a further drop this week in the value of Great Britain Pound, United States dollar. So now when market opens, we should be more keen with seeing the possibilities of getting sell opportunities than buying opportunities from the weekly time frame. From the weekly time frame, if we move to the daily time frame, if we move to the daily time frame, you will notice that last week we had a consolidation. We had a consolidation last week from Monday 14th. The market was consolidating. It was only on the Wednesday that the market pushed down. The market actually sold and break the previous daily support, but on Thursday and Friday, the market built back buyer's momentum and moved to the support area, which actually is like creating a form of previous support becoming resistance, previous support here becoming resistance now. And what they have noted is that just above the support on the daily time frame is a supply zone. So we easily see a scenario in the market as such. The market pushes down, it traces back, and then falls down right up to this level because of the base we are having here. The market falls right down to this level, then we trace back and maybe even test the previous support we are having here before falling to the demand zone as we saw on the weekly time frame. So we should be expecting something like this on the daily time frame. And what I can say is that as far as Great Britain Pound and United States dollar is concerned, we should not be ready or we should not be in a hurry to buy. We should rather look for convenient positions to sell. If for any reason you want to buy, you should wait for Great Britain Pound to break this level, this key zone to the upside before you can buy above there. So if not, you should wait for it to get to this base. When it gets to this base, you can retrace a bit, you can take a short buy, and finally breaks it and then it's coming to this level, you can wait to see how the market will react to it before you buy. But there is a high possibility that the market will obviously move down to this level, clear up the liquidity that is seated here. The market can possibly clear up the liquidity that is seated here and actually start buying back from this level or even clear it up. So we should move based on price action and on how the market is directing us. We should not impose any direction, or we should not impose an direction in the market. For now, we are seeing clearly from the weekly to the daily time frame that the market is selling, and that should be our key interest. On to the 4 hours time frame. Let's see what the market is presenting to us on the 4 hours time frame. On the 4 hours time frame, as we saw clearly on the daily time frame, we saw that the market consolidated in the better part of the week, in the better part of last week, and finally this candle that was formed on Wednesday break the zone, or it breaks this key zone, and the market build back momentum to test this zone, which actually is acting as a former resistance, as a former support zone, which we believe that at this point it can definitely act as a resistance. So from this level we should be waiting for it to pull down, and you see this level actually coincides as a demand zone on 4 hours time frame. So the market might obviously retrace a bit from there before falling down. So that should be our key interest. But now, if we want to take a convenient buy, we want to see the market push down to the demand zone at 1.26737, or the market retraces from where it is and breaks this key zone. This key zone, you notice the market has been there 1-2 times without breaking it. So the market can even get there to the third time without breaking it. So if to say that we are basing our entry on the current price, current market price at 134.76, we shouldn't buy at this level. We have to wait first to see that this level of 1.31 is broken to the upside and retested before we make any buy position. Apart from that, we have to focus on our selling position, because our overall bias is on the selling position, both from the weekly, daily, and of course the 4 hours time frame. Let's just have a glance at the 1 hour time frame to see what we can take out of the 1 hour time frame. So on the 1 hour time frame, actually you see a clear consolidation from Monday the 7th of October right up to Wednesday, the 16th of October, that the market finally break out of the consolidation. And when the market break with a huge candle, what happened? The momentum of the candle that break the zone is of course of extreme importance. Look at the momentum of the candle that break this zone. So the candle was actually huge, okay? But now after that, what happened? Buyers have been trying to push back into the zone. So as buyers push back into the zone, what happened? We see that price action keeps rejecting the zone, and price is currently at this level. So same as we saw on the 4 hours, same as we saw on the daily time frame and on the weekly time frame, we are convinced that the market will keep on being dropping in the coming week ahead. So it will be more interesting for us as traders to take accurate sell entries this week. As far as GBPUSD is concerned, be it on the weekly, daily, 4 hours or 1 hour time frame, we have seen clearly that our overall bias is on the seller zone. So what I advise us to strongly do is to exercise a lot of patience, wait for the market to retrace back into our supply zones, and we actually take sell entries from them. From GBPUSD, it will please us to look at EURUSD. Onto EURUSD, looking at the weekly time frame, you recall very well that we did a prediction of our prognostic of last week was showing that EURUSD was going to be selling, and it sold actually. You notice the candle, the weekly candle opened around 1.093, and it dropped down to about 112 pips the whole week. It drops down to about 112 pips the whole week. And what happened? We had identified the power week here to be our demand zone, so we were expecting the market to retrace from this zone a bit. And of course, as you can see, the market actually got into the zone and it retraced a couple of pips back to the upside, about 54 pips to the upside, and we are expected that if the market actually fills the power week, we should be expecting the market to get to the demand zone at 1.06867. So now, what are our expectations for the week? If you notice, from Monday the 30th of September, the seller's momentum keeps on building down, and of course, the market had created a weekly evening stir from Monday 16th October and Monday 30th of October and Monday 13th of 23 of October and Monday 30th of October. It created an evening star that double joined with the path that was formed on Monday the 19th of August to create a double top, telling us that weekly the market is going to drop. And as we see, the market has been building momentum from that week, that 30th of September, right through to October, and to where we are finding ourselves now. So one would conveniently say that this retracement of 54 pips you are seeing here is only prompted or is motivated by the power week we had in July. So now, what should be our expectations? We are still going to be working based on this double top and this star that price action has created over the past few weeks. So should we jump into buy positions? Of course, no. We can't jump into buy positions for now. We want to see that, okay, the weekly candle is formed. Will the weekly candle actually fill this gap? Of course, that's the highest possibility we are having. We could possibly have a candle that is formed, that maybe can be formed and then it moves up a bit. We can have a candle that can be formed, it definitely moves up a bit, then maybe from there skills one minute. So we can definitely have a candle that is formed, it moves up, then turns, then moves back down to completely fill this zone. And the next thing is that we will definitely have another candle that will push down to this zone. So these are expectations as far as the weekly time frame is concerned. But now we know that yes, this demand zone is prompted by power week and the market is currently reacting to power. We know as well that we have a demand zone at the level of 1.0673 that will push back the market to go towards buyers momentum. So we should actually maintain our overall bias to be the sellers bias based on this evening chart. Okay, and the market can possibly be traced back to this level that's acted as a resistance, maybe 1, 2, 3. The market can be traced back to the level and fall from there. So we could possibly have a scenario like this upon market opening where the market retraces back to this level, then fall from the level to break this zone. Or definitely just have a direct scenario whereby the market opens and don't push up much, then just a slight retracement and falls back to this zone. So that's what we should be expecting on the weekly time frame with EURUSD. From the weekly time frame with EURUSD, what is the daily time frame saying? What information or what can we gather from the daily time frame? That should be what we should be putting our interest on. Okay, so normally on the daily time frame, you will see that the power week that the market has created, or the market initially created on the daily time frame, is a clear demand zone. So we could possibly see a scenario whereby the market on the daily time frame retrace back to this level that has acted as support and resistance in this zone and in this zone. The market can possibly trace back to this level before falling back and then maybe bypassing this zone, or we could possibly have a scenario whereby the market retraces back and then test the neckline of double top, and then maybe from the neckline now you see the market falling to this zone. So these are the two scenarios. But now one thing you should notice is that the market ended this week with an engulfment. So the market will definitely open with a new candle. So if you look critically about at the way the market closed on Friday's candle, you'll you see this scenario, whereby the market is closing with a bullish engulfment. Get it? So you see that buyers have completely engulfed sellers. So there is a high possibility that there will be a retracement maybe to this base. Of course, if it's at this base, then it's respecting the zone that has acted first as resistance and the zone that has acted as support. And maybe it can even push on to test the neckline. So we should be expecting a reversal. So I strongly advise that tomorrow Monday we should be more observant than we being in the position that we can jump into the market. But I'm definitely sure that on the 4 hours and the 1 hour time frame, we'll see the market communicating with us clearly on what to do. Okay, so from the daily time frame, let's move to the 4 hours time frame. On the 4 hours time frame, what can we see? We will notice that the market had been in a complete downtrend from this zone to this zone. The market had been in a downtrend. So the market started respecting the 4 hours demand zone, and the market has already pushed up a couple of pips. I think 54 pips as we saw. Oh, yeah, 54 pips as we saw on the weekly time frame, if I'm not mistaken. We start from here, the market has already 54, 55 pips. So if you look at it critically, has the market actually taken any key zone? If you look at the market, if you want to analyze the market very well, you notice that from this lower high, what happened? The market pushed down to this level, and the market took out this lower low and retraced back to create a lower high here. And then what happened? It pushed right down to this level. So for us to be sure that the market will actually be buying, the market has to take out this zone completely, or maybe on the 1 hour time frame we have to see it clearly. But we should pay special attention, and we should not forget our neckline of our double top that we have seen on the weekly and the daily time frame. We shouldn't forget the neckline. We should also not forget this resistance, and we should not forget this support as we try to dissect what will happen in the market in the coming week. Okay, on to our 1 hour time frame. 1 hour time frame now, we are seeing something a little bit clearer here. Are we seeing that, okay, there has been a change of character on the 1 hour time frame? If you notice, on the 1 hour time frame, this is the high, the last structural higher low that pushed down. 1 hour, we see that the market from here, from this lower high, the market pushed down, create a lower low, and from there the market has been building. So on the 1 hour time frame, for us to be sure that, okay, the market actually is going to buy, we have to see that the market takes out this lower high completely from the market. When the market eradicates or mitigates it completely, we have to be sure that the market will then buy, then we can look at the buy entry to trade the reversal. But if the market fails to do it, the market retraces from there, we should know that, okay, we are in a continuous sellers momentum. So we see a scenario like this, the market takes it out, tests back this zone, pushes up. That's the scenario. Or you see a scenario whereby the market, upon market open, market clears out liquidity at this level and instead move down to create a new lower low, and the seller's momentum will continue as we have seen on the weekly, on the daily, and the 4 hours time frame. So that is what we should be looking at. With Euro USD, we should face it with a lot of an open mind, see the possibility of buyers and sellers in the market. So we should not be so fixed with buyers with Euro USD. From Euro USD, the next thing we will be looking at is USDCAD. So I decided today to include USDCAD on our analysis. So what should be our expectation for USDCAD? That's United States dollar, Canadian dollar. What should be our expectation? If you look critically, USDCAD had been on a tremendous high, let's say, bullish trend since some weeks back. It has been bullish. So what should be our expectation now? So onto the weekly time frame of USDCAD You see that right from Monday 3rd of October, what has been happening? USDCAD has been consolidating. So now, what's happening? Because this consolidation is happening within an uptrend. So that's one thing we should notice. If you notice, right from May 30th, the market was in an uptrend. So the market came right up to the level of 1.3880 and started consolidating, and has been in that consolidation since Monday 3rd of October till the market has been consolidating. So now, in the weekly time frame, when the market is consolidating, what is our option? What are the options we are having on the table? We want to see that the consolidation is broken, right? We want to see that our zone of consolidation is broken. So we have just two things in our mind. Either the market pushes further, breaks this zone, and then maybe rejects it and buy. Get it? That's a perfect scenario. Or maybe we have the market retracing back to this level, maybe purchasing, then breaks, retests, and sell. But this will be a very, very unlike the scenario, because the market initially has been on a rising. The market has been bullish. So what we can say is that, okay, this consolidation can be acting as a bait. We should be watchful. We should see that, okay, GBP, United States dollar, Canadian dollar breaks this zone this week, retests it, and then buy. Okay, we might see another option whereby it breaks without retesting. It breaks the zone, and then we see a scenario that it consolidates above the zone, consolidates to the Y, and then it buys. So that's also another scenario with USDCAD on the weekly time frame. But now, if you notice, it has consolidated for close to a month, for more than some months, from 2022, from November 2022 right up to October. That means it has been consolidating for about a year. So if it breaks it on the weekly time frame, we should know that it's a long-term buy. We should not hesitate to enter that trade. So we should be more keen and more pay special attention to it on the weekly time frame. From the weekly time frame, let's look at what is available on the daily time frame. So on the daily time frame, we can see our consolidation clearly. So there is one thing we should be expecting: either the market pushes right up to this area, and then maybe pulls down for the consolidation should start. The market pushes here, then pulls back maybe here, and maybe retrace a bit and then pulls back to keep up with the consolidation, or the market pushes back and break the zone. So we should be expecting to see something unique on the daily time frame. But when the market opens, we want to see that the market pushes through this zone. When it pushes through this zone, before we should start contemplating on the decision we are going to take as traders. So pay special attention as far as USDCAD is concerned this week. From the daily time frame, let's look at the 4 hours time frame. On the 4 hours time frame, let me take out our consolidation zone so that we can actually see our charts clearly, and then maybe study the trends that are above, or maybe the trends clearly. So on the 4 hours time frame, we'll see that, okay, we have been in this in an uptrend for quite a period of time, and we are still, of course, in the uptrend. So now, what's our expectation? We should see the market push down a bit towards our trend line. The market can push down, touch our trend line, then further push up to this zone. Maybe it traces back a bit and push up, and maybe already breaking the consolidation. That's our expectation on the 4 hours time frame. So we have to fasten our belts to see that the market buys more with USDCAD as far as this week is concerned. But if in case the market doesn't buy, or the market retraces a bit and then maybe breaks our trend line, we should obviously wait for the market to create us a supply zone, and then we enter a sell position, hoping that it will move to any of our key zones within the consolidation we have seen on the weekly and the daily time frame. From there, we can look at the 1 hour time frame to compare what we are seeing on the 4 hours time frame. Yeah, on the 1 hour time frame, we'll see that we are still yet in the an uptrend. So we just want to see the market retrace back a bit, touch our trend line and push it further, and maybe possibly break the previous highest zone of our consolidation at 1.3441, and we'll be looking at the possibility of entering long-term buys. Of course, if it breaks that, we should be expecting that the whole of 2025 USDCAD will be appreciating. So that's our expectation for the rate from the 21st to the 25th of October 2024. Please don't forget to subscribe to our channel, like our video, and drop a comment so that our video gain more attention. Thank you very much. Enjoy your week.